Hey, it's James here, and in this video, I'm going to show you why Master is likely to fall to 20 bucks. If you go on social media right now, you will no doubt find Sailor's Sheep. The guys, the gals doing videos and posts telling you that it's okay that Stretch is 10 and 15% off par. The guys and gals telling you that you should be stacking Bitcoin aggressively because it's going to create generational wealth. The guys and gals telling you they're 100% in Master because Michael Saylor they believe. I'm here to tell you that most of them are very likely to be very disappointed. If I pull up a chart of strategy, MSTR, and I put it on a log chart and we look at the entire history of this thing, we're going to see that it recently tested its all-time highs. All-time highs, by the way, that were made back during the dot-com bubble. All-time highs, by the way, that were made based on some very ambitious profits reporting. For those of you that don't know, Master was accused of over-reporting profits, and once their reported earnings were adjusted, it actually turned out that the reported earnings, reported profits, ended up being reported losses or something to that effect. The stock fell about 60% in one day. Any trader will immediately recognize this pattern. If you see this pattern on a 5-minute chart, if you see this pattern on a 30-minute chart, if you see this pattern on a daily chart, a yearly chart, it doesn't matter. This is a very clear bull trap. And that is exactly what happened. After it snuck above the all-time high and trapped bulls, it then proceeded to dump 80%. And all throughout this drawdown, we've seen these furus on social media screaming, buy, buy, buy. And the further it goes down, the louder they get because the more desperate they get. But if you actually look at this chart right now, this is a very clear head and shoulders pattern. We can even see that the right shoulder has the increasing selling volume, which is a telltale sign. Full disclosure, head and shoulder patterns get a reputation for being one of the quote unquote most reliable patterns in trading. In reality, head and shoulders patterns are only right about 50% of the time. And the way this typically works is if you're looking at a regular chart or a linear chart, then you would measure this from the high to the neckline. The problem is we can't really do that because that's $438 a share. And if it dropped another $438, it would be negative $300. So obviously that's not going to work. We can't do that. So let's put it on a log chart and we can measure it. It's an 80% drop. So if we take that 80% and we copy it and we paste it, that gives us a breakdown target of roughly, ooh, you guessed it, 20 bucks, right at the $20 level. The 2022 low is actually bottoming around $13 to $14. Strategy is set to take back all of the gains that occurred from 2022 through 2025. And if this comes to pass, that means that strategy will end up falling about 96% off of its all-time high. For those of you that are unaware, during the dot-com bubble, strategy actually fell 99.87%. Strategy's entire existence is now tied to Bitcoin and the performance of Bitcoin. Historically speaking, Bitcoin has 4-year cycles and 12-month bear markets. That's in the best of times. Historically speaking, Bitcoin drops between 75 and 95%. Right now, it's down about 50%, which means if we're going by historical precedent, that we still have another 3 to 4 months before a Bitcoin bottom and probably another $20,000 to $40,000 for Bitcoin to drop. That's going to put even more selling pressure on strategy, and it's going to put even more pressure on Stretch. And again, that's based on the best of times. That's based on the fact that Bitcoin has existed for about 17 years and one of the most bullish macro environments in recorded history. If equities suddenly go into a true bear market, dot-com style, during a bubble burst where we go into a 2-year or 3-year bear market, no one really knows how Bitcoin is going to react, but chances are it will fall much further than what most people anticipate, and it will absolutely crush strategy and Stretch, in my opinion. Now, the flip side of this is simple. When head and shoulder patterns fail, they tend to be really great buying opportunities because what happens is you have people that are shorting through this level, which by the way is retesting these highs back here. People are shorting this level. And if that supply can be absorbed by buyers, then they will often trap those sellers and you will get a push up or a short squeeze off of that level, which can sometimes ignite a new bull trend. That's why head and shoulders patterns can be very dangerous, because people have been told that they're so reliable, but they're not. They really are about a 50-50 coin flip. You have to watch for confirmation. If price breaks below this neckline, which is this general area on the chart, if it breaks below that, closes below that on meaningful volume, chances are it's going to go much lower and it's going to have a target down around 20 US dollars. If, on the other hand, it goes below that, closes back on top, leaving a tail behind, chances are it's actually going to get at least a temporary pump off of that level. If you enjoyed this video, be sure to give it a thumbs up and subscribe to the channel. As always, please remember that I'm just some guy sitting in a spare bedroom. Nothing in this video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. As always, please remember to invest and trade safely.